Today is Thursday, September 24th, 2020. Silver to the M2 money supply ratio is at its all-time lows. It's trending at its all-time lows. And it probably should definitely maybe go just a little bit higher. Number one, because, well, we're silver bulls, we're silver speculators, we're positioned for silver to go higher. And of course, there's a wholesale, of course, in many, not just precious metal commodities, but many other commodities, especially oil and other things, are in massive, massive supply shocks, including silver. Not especially in February, March, in the pandemic crisis initial stage, there is a flurry of wholesale and retail, especially on the wholesale end of silver and gold. It was practically impossible to find a wholesale buyer or seller. There was no market because it was overwhelmed. So basically, you know, basically what this ratio is indicating, the fact that it's at its all-time lows, basically means that we are, commodities relative to equity prices are extremely, extremely cheap. In fact, they're probably the cheapest it's ever been. Not ever been, but pretty up there. Anyways, speaking of the stock market, the S&P as of today actually erased basically the entirety of this year. So we're at break even right now, a little net negative. In fact, we got jobless claim data today, of course. US initial jobless claims, I'm reading off 870,000 versus 840,000 consensus, and the prior was 860. So we saw a 10,000 increase in new jobs, new claims, new people filing for claims. U.S. continuing claims is at 12.58 million jobs versus 12.275 consensus. So still a little bit higher than the consensus and actually a little bit lower than the prior 12.628 million jobless claims, continuing claims. Now, people seem to, literally think that, okay, now that we've reached under, in terms of initial jobless claims, we've reached under the million jobless claims kind of threshold, if you will, that psychological threshold, which makes no sense because still at 870,000, initial jobless claims, that is a tremendous, tremendous number. Not to mention the continuing claims, 12.58 million. People are saying that, we're rebounding because we managed to get a little bit lower, marginally lower from 12.628 million. It doesn't really make sense. We are still in massive, even I'm blanking out on his name now. Kudlow, of course, Kudlow. He was even saying himself, and he himself is a rhino. He's a political rhino. He's a traitor. He's a libertarian traitor. But anyways, he was saying today, in fact, even him, he was saying how, there's a huge problem to solve in the jobs market. There's still too many people filing for claims. There's still too many people out of work. There's a huge gap to fill. Meantime, the dollar, or rather the dollar index, trades over 94. We rebounded from that 91, 92 range ever since, and some people are convinced we're seeing a kind of squeeze. Let's go to the chart rather than talking about it as well. Right, we have that on the 20-year, oh, whoops. Wait. Oh, never mind. So basically, so the dollars, people are, okay, I get it. Look, so the dollar is up and over all the short-term moving averages. In fact, as of the past 3 days, it's actually closed over the first long term, the 50 EMA, which kind of, technically speaking, it concludes that this trend is, in a conditional form of higher lows, and it's a strong trend. It needs a pullback, which I guess it's kind of starting to do right now. It's a little bit flat, but it's trading at a lower high status intraday. This candle looks like we're maybe at a topping pattern at the half dollar of 94. But anyways, as the dollar continues, as people can continue to buy more dollars, they're only going to get squeezed. They're only going to get squeezed. People are so convinced we're going to see a squeeze to the upside, but little do they know they are the ones that are going to get squeezed to the downside. Right, and the dollar is trading a lot stronger relative to a much more weakening euro relative to where it was. Remember, it was trading at like 120, and now it's at like 117, 116ish. But anyways, and a lot of other currencies as well are trading much weaker to the dollar. And like I said, we're, as of right now, we're trading with a lower high status intraday most recently. And, apparently the Democrats, they announced today that, and this is important, right? Because I'll point this out after the number is said, because this number is so big, $2.4 trillion. That is the Democrats' stimulus bill. That's what they want. They want it to be 2.4 trillion. Republicans are never going to go for that. They wanted 1 trillion. They're never going to go for 2.4. So, I just don't understand if they're going to go for all of this, guaranteed subsidized loans across all commercial banks that are systematically affected, of course, with the Federal Reserve and their loans and what they're holding from the commercial banks. It's all affected. It's all interconnected. So this 2.4 doesn't make it doesn't matter if it's going to be 24 or 34 or 104. It doesn't matter at this point. The damage has been done. And in the meantime, of course, right, and this compensates for that ideology. New home sales rise to a 15-year high, essentially, almost a 15-year high. And the reason being is because, right, have you seen the last 30-year mortgage? Has anybody filed for a mortgage application recently? I think so, because mortgage applications in America rose to a new high since 2006, just this past week alone. In fact, America's mortgage applications, they're up like over 40% in the past year. So, and this makes sense, right? This happened during, well, kind of prior and a little bit during the 08 crisis. And it's exactly what's happening now. And before you know it, the real estate market is going to implode. Prices are going to implode because we're seeing a huge wave of buying that should not be that huge, meaning that people that suffer from kind of addiction, if you will, from obtaining these kind of guaranteed loans, but sometimes they're not relieved. Sometimes loans aren't relieved. Sometimes you have to pay interest and the principal. That's how a loan actually works. So people need to pay back their money, but if they don't have jobs, like over 12 million people actually don't have jobs in this country, and it's probably going to, increase if there's going to be a case of hyperinflation and prices are going to rise and businesses' costs are going to rise, and businesses will then have to cut their expenses by, what did they do? What did they do in March? Well, they cut their expenses by actually firing, or in some cases, furloughing, their employees, either permanently or temporarily. And as we're seeing in recent cases, it's becoming a permanent case, right? The amount of permanent jobless claims is or people that are just permanently lost to jobs is just absolutely increasing. So, right, so that's a little bit of macro talk. I want to kind of dig into the trade we made today. Well, I want to start with SPAQ. That is the swing trade I'm currently in. I got in today at 1281, just with the little cash that I have left in buying power. Right, 1281. Currently closed at 13 for the week, down 7.5%. People thought that this right here, right, disregard that. People thought this right here was a cup and handle pattern. I told them it wasn't. That's why I never even drew it as a cup and handle. It's a symmetrical triangle, an overall convergence with the descending resistance alongside with the ascending long and short-term EMAs, of which the trend completely shattered through all of them. It bounced, above, of course, it closed above the 100 SMA. Indicates a potential bound, but intraday, I mean, it looks like the Bears are still in control for sure. But I mean, in my opinion, this is a short panic. That's why I got in. It's panicked all the way from $18, currently at 13, and 13 is kind of, well, anywhere from 12 to 13 is a pretty major supply zone relative to within the symmetrical triangle. And this, of course, is a 200 SMA, which we haven't seen a bounce from since it didn't even spike. So that's a huge deal, right? $12. That's a huge area of support. We're seeing an increasing amount of momentum to the downside, right? Volume's increasing to the downside. Money's really coming out. So, yeah, I want to check out the RSI. It's not deeply oversold, but it's a pretty sharp, kind of velocity rate. Kind of the rate at which it flashed to the downside is pretty significant. But it probably could go more, and I'd be happy to accumulate more if it approaches 12. I'd be more happy to accumulate more there. But anyways, yeah, so the trade we made today was in Pola, right? And Pola was probably a main kind of gapper for today, a main kind of player for most traders, intraday penny stock traders today. And in fact, it kind of traded intraday last week as well. And pre-market, we saw it kind of right to the upside on very. So one low and toward EMA term, got in for that red to green move, right? It literally made a red to green move. I got in because it worked in the past in this exact pre-market, same pre-market we're in right now. It made a red to green move. So what does that mean? Continuation for a move higher. Almost got shooken out on this candle, but I decided to stick with it because my risk is my reward is much greater than my risk. However, I did decide to get out because, before this candle kind of took off, the volume was very, very shaky, and I thought it was going to flake on me, the price, and I got shooken out basically. But I got shooken out at a higher price than I got in, so I'm happy. So that was the trade for today. Of course, the mentality was the gap fill. From, for some reason it halted on the circuit breaker, I suppose, during pre-market, which rarely happens. Closed or pending news, whatever it was. I forget, but it closed over $1 a share under where it initially was, like 20 minutes before. And it went down like another 50 cents or so. And I got in basically at the bottom at 350, 20 cents off the bottom. And I sold basically 20 cents higher. So for a higher low status, I probably in hindsight, of course, should have stuck in, because if you follow the chart, 460, 656. So it went all the way to 656. Of course, that is the worst thing you want to see, but it's totally okay. I'm totally okay with it because I made money. Well, I mean, not really. This is a very small amount of money. But the idea is there. That's what I'm trying to get at, is perfecting my strategies and ways of trading and investing in so many different ways that are beneficial to me, as well as my community, because they benefit from my perspectives and I benefit from theirs as well. But anyways, guys, yeah, that's basically what I wanted to share with you today. If you would please hit the like button and go subscribe to our channel. It really helps the channel out. And plus, we provide pretty much weekly, content, maybe 3-5 times a week at most. So please hit the subscribe button, and we'll definitely get back to you soon. Gotta tell you guys that we are not financial advisors. We're not, anything that we say is for entertainment and educational purposes only. Trade at your own risk, do your own due diligence. And with that, I thank you very much.